Welcome back, and in our top business story, Middle Eastern investors continued their inter-regional purchasing activity during Q3 2012, taking advantage of opportunities to acquire prime core assets in the world's major cities, according to the latest report. According to Jones Lang LaSalle Global Quarterly Flow Report, the majority of this investment has been focused on Europe and the US, with only a small amount of deal flow focused on the Asia-Pacific region. The most popular sectors have been offices, retail and hospitality, while London and Florence have seen inward investment from the Middle East in Q3. Fadi Masali, the head of the Jones Lang LaSalle International Capital Group in the Middle East, was quoted as saying that the past few years have seen the growth of private investors in the Middle East, in addition to the sovereign wealth funds, with Middle Eastern investors also becoming more active traders, being willing to sell non-core assets, with several major disposals recorded during 2012. Consumer goods and retail in emerging markets are expected to benefit from a supercycle consumer growth, driven by a population boom, increased wealth and industry consolidation. Swiss private banking firm Lombardier held a roundtable discussion today entitled The Emerging Consumer, Investing in Consumer Growth in Rapidly Emerging Economies. The discussions revealed that companies located in Latin America, Asia, Africa, the Middle East and Eastern Europe, as well as those in developed markets, which have at least 50% of their sales in emerging markets, are expected to perform particularly well. Mr. Didier Rabatu, the portfolio manager of Lombardier's investment managers, identified population growth combined with middle-class emerging market consumption to drive this growth, adding that for the region, Turkey, Saudi Arabia and the GCC countries will see the benefits due to stability.
You need to invest. You need a stable environment. Political and economical stable environment, and I guess that Turkey and Saudi GCC respect those two rules, and you need to find companies big enough which are gonna supply the consumer, the local consumer, with the sort of products that we are looking for, whether it's in the food sector or in the retail sector. So let's be precise here. If you go to Saudi, for instance, you've got Herfi. Herfi is a halal burger company. They are very strong in Saudi and compete with McDonald's and Burger King. That's typically the sort of stuff that we like. If you go to Turkey, you've got some cash and carry companies, sort of food retail cash and carry like Bizim, which is also very good. So we need first to find some sort of a stability in a country where there is a lot of population and young population, and then some companies where we can invest in.
The UAE has emerged as the most important market for Scottish products in the region and one of the fastest growing markets globally, as the food and drink sector continues to drive Scottish exports to the Middle East, according to the latest figures. According to Scottish Development International, the Scottish Government's Investment and Business Development Agency, sales topped $367 million in 2011. Highlighting year-on-year growth of 28%. The UAE has been revealed as the largest market, accounting for $143 million. Scottish exports, including energy, metal and financial services to the Middle East, currently stand at $1.586 billion, mainly driven by oil and gas reserves. On the flip side, Middle East investments into Scotland have seen a flurry of activity this year, such as the Emirates' $177 million sponsorship of the new Emirates Arena in Glasgow in September. And with that, let's now take a look at the stock indices across the GCC.